If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is July 10th, 2020, and today is Friday morning. So looking at the highlights of the day, the market's still very volatile, even though we're in summer session, and Amazon hits new record highs yesterday. But, and it's a big but, the markets look like they want to sell off. So we're going to look at the various markets. There is no economic event scheduled for today. So jumping into the currencies, US dollar gains versus the major pairs, while the indices, we're looking at the Dow Jones trading lower. Okay, now they does represent some of the weaker stocks that are trading, and the Nasdaq looks like it's taking a break and taking some profits. Now looking at the commodities, gold retraces while oil takes a nosedive. Unbelievable sell-off yesterday in oil as the anticipation of future lockdowns are going to be happening, as this pandemic unfortunately is spreading faster than everybody can catch up to it. Lastly, looking at the stocks, it's weak stocks versus strong stocks as the stocks are trading with the market. Okay, the strong stock obviously are the high-tech companies, and the weak stocks are some of the banks, some of the traditional businesses as well. So we're going to take a look at that and see what we can expect from today's trading. So I'm going to first take a look at the Euro USD at a 1-hour chart. And earlier this week, we had a fake out breakout. I mean, we did break above this resistance-ish level twice, okay? But didn't sustain it, and we're still between our upper limit and our lower limit here, okay? So if this does break this minor support level right here, our 112.70, we could definitely see it retrace back to the 1234-ish, 1235-ish level around these areas. So looking at that Euro USD, now it's following together with the GBP. Now the GBP was quite funny this week because initially it didn't go, and then it did pounce above, but it was the first one to actually retrace, and it's catching up to the euro. Okay, so if you want a leading indicator versus a lagging indicator, there you go. The euro has been leading the market versus the dollar, and the GBP has been catching up to it. So if you want to, watch what each other is doing and then jump into the GBP, it could be a really good trade, okay, in anticipation that the euro is going to lead. Now, looking at the commodities, gold retraces to 1796. We were trading at 1800 earlier. Now, remember, we still have support level at this 1746-ish level. 1800 is a nice roundup number. I would have liked to have stayed there, but this is just profit taking, okay? Ultimately, it does look like the gold will hit 2000 before the end of the year, okay? We're only about 200 points away from that. And, especially since we're going into the end of August, we'll be starting the elections in the United States, and also the pandemic probably will start skyrocketing, unfortunately, in October-ish time. Okay, so something to consider going into the balance of the year. Now, looking at oil, look at this massive nosedive from $41 almost down to $38.93 in anticipation that we're going to go back into lockdown. Now, we don't have much technicals here, okay, because we've been trading on the higher end at 41.25-ish level and on the lower end 37-ish level. So right now we're really smack in the middle of that. So you got to keep an eye on this. If it does continue to retrace, it could still retrace down to this 37.66-ish levels. Okay, so just keep this in mind as this continues to trade. Now, looking between the Dow Jones and the Nasdaq, the Dow Jones obviously weaker, trading lower this morning at 25,369. Down for its 26,000. Now, this has really been a beautiful range-bound trading for the month of June. Okay, this was the beginning of June. We capitulated above 26. Every time we hit above 26, this was your overbought position. Okay, so every time it hit this 26,178, that was a potential entry level for shorting it. Okay, now our next support level is this 25,000-ish level, and we're almost there. Now, we've hit this area a couple of times, okay, and then retraced even to the lower limit at 24,500-ish level. So we're about 700 points away from that. Now, I don't want to jump into this shorting it, and the reason is because if we look at the tech stocks, they're still very, very strong. Okay, so until they sell off, until they start changing character, I don't want to jump into them. Okay, but looking at Apple hitting a high of 382 yesterday, unbelievable. Can't stop this thing. Looking at Amazon hitting all-time highs, $3,179. Okay, and this is after all that Jeff Bezos says right after during the pandemic in May when they came out with quarterly earnings saying we're going to hit a really tough quarter. You can't see it in the stock, okay? But the markets are shifting. And the reason the markets are shifting is because people are going away from buying physically in stores, okay? So there's a stream of various retailers in the United States that are going out of business, including JNC, including Neiman Marcus, which is a high-end private label company, including Brooks Brothers, okay? All this week, they're coming out with this. They're filing for bankruptcy, okay? So it's really a very interesting environment that we're in because online sales are going up, but retail sales are going down, okay? So those companies that can transform themselves, like Apple, like Amazon, because they have such a strong presence online, are able to recreate themselves in this pandemic environment, okay? So that's really very important to note. Now, looking at some of the other tech stocks, looking at Microsoft hitting $215, okay, and then retracing down to $213. So this may be a position where people start taking money off their portfolios, okay, because we are at record highs here. Looking at JP Morgan, trading at $91 a share, down $1. So throughout that entire time, the markets rallied, okay? The entire time when the markets rallied throughout the last month, this went downwards, okay? Which means to me, okay, that if the market continues selling off, we could head to $83 a share in JP Morgan, okay, which are the traditional banks. And it makes sense, okay? The traditional businesses, which are 70% or 60% of the economy, are hurting right now. And that's really tied into COVID-19, to the coronavirus, and really very interesting how we're going to reshape ourselves, especially if we have to go back into lockdown. This is Fred Razak. I want to wish you guys a great weekend. Stay safe. God bless. Thank you.